What's happening, guys? I hope everybody had a fantastic New Year's. This is the first Monday night scan of 2023. And I could get used to these 4-day work weeks. I don't have any problem with the forced day offs and the forced 3-day weekends. I think we got another one coming up, Martin Luther King Day, and then we got President's Day, and I don't think we have any for a few months after that. But we'll see. Either way, I hope everybody's 2022 was everything they had imagined it to be, or at least, up there with, some of the top years. Hopefully you guys did check the boxes on changes that you were looking to make. We've talked about kind of building a habit prior to 2023 so that you can just hit the ground running, tomorrow, Tuesday, and hopefully you guys crush it this year. Um, I think last week was great. I mean, if it's a sign of anything to come, I mean, those runners, we've had multi-day runners, back to back to back weeks, which is great. I love things hanging on for longer than they typically would. That gives the longevity to the moves. It gives secondary opportunities, and it's not all just like a one and done market. I really enjoy seeing things actually maintain for whether it's a couple days, weeks, or even multi-month breakouts on some of these moves. So like I said, if it's anything like last week, we're gonna hit the ground running out of January. I mean, it's we had Pal last week go from 5 to 45. We had HOTH, we had Pally, PALI. They raised, everybody crowded it short, came all the way back up, offered a really nice secondary trade opportunity. And it's really just repetition of the same thing. All these things are squeezing out those that are fighting, being stubborn, and taking that crowded trade. And I think the biggest, probably the most important takeaway from either last week or prior weeks into the month ahead, January, is understanding that when there's only one or two trades that are there for you to trade, available, then you're gonna be fighting with the crowd. You're gonna be fighting with all the other people trying to do the same thing. So you definitely can trade that, and you can be proactive and forget about where it should go. You've got to be there ahead of time, right? You've got to be ahead of time and just get out. And maybe you're frustrated for 30 seconds or a minute, like shouldn't have covered it, went lower. And then guess what? It goes the other way. The other thing with those is if it doesn't, it starts going sideways. If you don't take it off, you've got that swipe risk that we talk about over the last couple of weeks on Sunday Video, where you need to build in that swipe risk that just in case it has that random swipe up. And if you've got too much sides, then you're going to be stopping out because of emotion, because you have to, right? You should be stopping out because you should, right? You should be stopping out because that was your plan. I never really liked, forced stop outs. So the more I compare them, the more I can do to, build in that risk so that if and when a swipe happens and I'm still in it, at least I can make a more sound decision. Like, all right, is this is this going to retest this prior level, or is this going to just fade off? And have that moment to kind of think about what I want to do with the trade, rather than like, oh man, oh here goes next stop. I gotta, I'm forced out. And I do feel like that happened with a lot of traders that maybe were fighting Cala, especially with the 35 backstop that we talked about, and numerous other plays throughout the week. So the good news is all those squeezes last week, they were crazy. They were great. But the good news is that if you were a short seller, the only reason you would really lose on those is if you're fighting the trend, or you're trying to figure out which way it's going to go when there's no edge, right? Those are really the two biggest things. Being stubborn, fighting that trend, would be the only way you get bent on a lot of those trades, or add into a loser and trying to figure out what it's going to do with no real edge. So if you can fix that, if you can take that away and note that when you're in that moment, when you're looking at this thing and saying to yourself, it could go either way. That's a sign. That's a sign to go ahead and either size out, move on, look for something else, or whatever. But point that I was making is when we have one or two main names, that's when things are crowded. That's when all these things matter. When we have 6 to 8 to 10 gappers, then it's sort of business as usual and you can trade a little bit more freely. But when you only have one or two big gappers, one or two main names with volume, that's when you need to really, make that mental note like, hey, I need to be on my A game today because if I'm wrong, I'm going to be really wrong because everybody else is going to be wrong, right? If everybody is focused on those two names and it's not, dispersed amongst a dozen different names, then you're going to be competing with everybody who's trying to do the same exact thing. And if you're doing that, that's when you have those outlier moves, outlier risk, outlier action. So you don't want to deal with that stuff. And there is a way to fix that by sizing down, building in that swipe risk, and just being mentally aware that, hey, you know what? There's only two main runners today, and I need to be super, super cautious. All right. So I think let's go through my notes here. The last week I ended up taking off a little bit of time. Obviously, I didn't take off the full days. I never do. But I felt pretty good about the time that I did take off. Once I started to get to the trades and they started to kind of end what I was prepared for, and I started to get into it could go either way. I just said, you know what, I'm going to be done, and I got off desk, took some walks, hung out with the kids, and did different things like that. So I will continue to try to do that, more in 2023. It's always been a key goal of mine. It's just taken me a long time to do it. So I would say I've got a couple things to consider for 2023, and I've got a couple things that I'm going to work on in 2023. So one of the biggest things anyway for me, I always used to get very anxious about missing trade opportunities, missing the market open, not see, the action and uh, you know, seeing trading on a regular basis actually does impact your trading, meaning when you are monitoring the market regularly, you're making decisions based on stuff that you remember from the prior days, right? You remember how it acted at a certain level. You remember how it stuffed or how there was a lot of absorption at a particular level. You remember how there was a short squeeze to a particular level. You remember different things that whether you realize it or not, you're actually using this information to make trades, whether it's a day later, a week later, or, however long it might, be before that set comes that you remember. So that's the only part that I would say is difficult by not seeing the action every single day. However, the type of market that we're in, you just have to remember, there's always another one. There's always another trade coming. And that's something that I had to work on personally. And, now I can take a day and not really worry about, I shoulda, coulda, woulda, that's always the worst words to use. So just keep that in mind. But things to consider for 2023, focus on you. All right. So literally just you. And, this is in trading. Obviously you shouldn't be selfish and, hang out with your family and all that good stuff too. But in trading, just focus on you and what you're best at. You're not going to be someone else, right? You're not always going to have the same risk profile. Maybe they sold a multi-million-dollar business and they're trying to make trading work and they don't really care about the same risk that, you do because you've been working paycheck to paycheck. You've got rent, you've got all these different things and you're trying to make it work. You've got totally different lifestyles, right? Totally different risk profiles. So just kind of think about that as well as, who are you aspiring to be, right? A lot of times there's a lot of great traders on Twitter. There's a lot of great young traders, single young traders, no family, no wife, no husband, no, significant other, just them focused 100% on trading. If you have a family, if you have kids, you can't replicate that, right? Because you have other priorities. So rather than getting frustrated by seeing someone 10, 20, years younger than you, outperforming, doing way better, guess what? They don't have half the things or 90% of the things that you have to worry about. So stop comparing and stop thinking about, how you just want to be like them. That's not you. There's the bachelor lifestyle, and then there's the, the family lifestyle. And there's a huge balance that you just can't do if you've got one, outweighing the other. So just keep that in mind, especially when you sign on to social media and you see somebody doing something great and you get frustrated. You know what? Who cares? Someone is always going to make more. That's always going to be the case. You're going to have your best day. Guess what? Somebody made a little bit more. And you have to remember that, and you have to be, comfortable with how far you've come. Look back at your own personal development. It's fine to be inspired by other people and find better ways and get pushed by other folks to, be better in certain elements. But if you're always focused on more and more and more, if you're always focused on, trying to make things, work better for you, and you're balancing all these other things that they don't have to do, well, you know, remember, they're they don't have to balance half the stuff that you have to do. So, other than that, the other thing too, for me anyway, swing trades versus day trades, right? The pros and cons of that. There's been a lot, I mean, a ton of fantastic opportunities on the swing side of things. And, for me, I wish that I did do a little bit more swing trading in certain situations, but uh, I have to separate that from my day trading, and I can't be outsized on the swing trades. Otherwise, I mean, it just everything just comes back, and I'm focused on that. 4 p.m. comes around, something happens, somebody texts me at 5 p.m. I got to be back on the desk, right? So those are all choices, things to consider for 23. Where what do you want to get out of this? Are you looking to just day trade and not make this a 24/7 kind of thing? Or, are you diving all in and, really gonna, push? For me, if I'm swing trading and I have a lot of positions, I never fully disconnect. So that's important for me to kind of realize. And especially for you, depending on what you want out of this. Do you want to come and get prepared at night, come for the morning and do what you do best? Or are you looking to do, it all? And what are the pros and the cons? What, kind of happens if you have to manage a portfolio? Um, I think it's important to put yourself out there, and, only as long as you need or want to. So I've met a lot of great people online. And if they did not put themselves out there online, then I wouldn't have met them, right? And you meet a lot of good people at Traders for a Cause. I would highly recommend anybody that didn't go this year, go next year. Meet people in person. Those are the people that are going to rally behind you. Those are the people you can bounce ideas off of. Those are the people that are going to pick you up, give you high fives, whatever it is that you might need. But the more that you put yourself out there, the more that, you might attract different people, relationships, conversation, and you never know who you're going to meet when you do that. The only problem is once you fulfill and get your sort of trading group or your trading friends or whatever it is that you set out to do by being on social media, just if you find it taking a toll on you, just scale back, get out, get off once you have what you set out to get from it. And it's very difficult because what happens is that most of the traders that maybe were unsuccessful, or maybe they're doing well on their own, but they still are not where they want to be. They take out all their insecurities on you, who is aspiring, trying to become better, trying to give good information, trying to help others. But they're gonna take that moment to put you down and make you feel bad about, whether it's a loss, whatever it may be, uh, any chance that they get. And then, as much as, we all know that it's their own insecurities that they feel the need to have to do that. But at the end of the day, it's gonna take a toll on. So the point is, find your people and then just get out. It's not worth being on social media. I barely, I tweet during the day, but I don't really use social media to, to speak with people or to get out there. I only have it just because of my business. If I didn't, I would just delete delete the account, and it's just not worth it. Other than that, take non-monetary based risk. So get out of your comfort zone. Now, Sam is a good example of that. Sam was probably not going to come to Traders for a Cause. Absolutely love it. Same thing, Dawson. Two younger guys, and two that were not the types that would probably be like, all right, yeah, I'm going, I'm buying a ticket, I'm going. They came, they had the time of their life, and they met a lot of good. And same thing with some of the guys that I've done interviews on Investors Underground channel. All probably know guys first, know. And by the way, I'd love to interview more ladies. There's just such a small number of ladies out there. I have one or two in mind in the IU community, but uh, most of these people are no first, and then they do it, and then they're happy they did it. They put themselves out there, and somebody like Sam is now a good asset to the community, doing every Wednesday night webinars, seminars, whatever you want to call it, Zoom meetings, bringing other people out of their shell, because you never really know how actually good you are at maybe relating to someone else and giving them that aha moment. So put yourself out there, take risk. Doesn't need to be money risk. It could be risk of, just embarrassing yourself, or things that you normally wouldn't do just because you choose not to. Give it a shot. And last but not least, take somebody under your wing. You can see other people that have the same work ethic as you. I'm not saying just help anybody and everybody, right? There's a ton of people that just want handouts and want to be told what to do, and really don't have that drive that maybe you had to get where you are. However, there's plenty of people that do. And you can recognize that, because you can recognize, somebody that has the same qualities as yourself. When you do that, help them, surround them, pay it forward. And you never know what comes back, right? So give that a shot in 2023. And I promise you that seeing somebody else succeed a lot of times can be even more fulfilling than your own success. And if you can't be happy for somebody else, then you're never going to be happy yourself. So give it a shot, help somebody out, and that's that. Let's see. Some goals for me. Continue to reduce exposure as far as headaches and stress exposure. So one of those things for me was, exactly like last week, Kala, Kala. Traded a couple days, had a couple good trades on it. Had one trade where I lost maybe 2 or 3 points on it, something like that. But I'm not overly aggressive. I'm not getting crazy. I'm not going in the size that I used to go, 2, 3, 4 years ago. Just not worth it. All it takes is that one that takes all your money, right? And in this day and age, when we have those circuit halts, it's not worth it. And I just don't want those headaches or those stressors to come when they don't need to. There's plenty of other opportunities. And if you've noticed, I always focus on the most liquid names. If I trade the low floats, I trade them myself, I trade them quietly, I trade them small. I focus on highly liquid names for the high conviction trade. It's impossible to get high conviction on a low floater, 500K, a million, 1.5 million flow. It's impossible. And if you do, and you're wrong, you're broke. So what's the, where's the win here? Yes, definitely good outlier moves. They're good opportunities, but over time, 8, 9 out of 10, you might win. That one is going to smoke you. It's going to make all the other work useless. So other than that, some other personal goals, getting off desk more. That was the biggest thing for me. And I did a pretty good job at it last year. It took me 3 New Years to actually do it. I always had these ideas that I was going to do it. But remember, are you trading to live, or are you living to trade? And ask yourself that. And I'm always a work in progress. I'm always open about it. It's very difficult for me to do those kind of things. But I've been doing a lot better. And like I said, I don't get anxious about missing days. And the biggest thing that I've realized that I need to do, and this might help you too, is that clean cut. If you're going to be like, oh, just take the day off. Yeah, sure. Go in my living room, and, I'm going to end up venturing back into that office. But hey, we're leaving at noon, and we're going somewhere, right? Clean cut, out of the house, away from the office. No problem. I can prepare for that. I have a doctor's appointment. no problem. I can prepare for that and get ready for it. If I'm going to pick my daughter up at school, no problem, right? But when you're given the choice and you don't have to leave, for me anyway, choose not to. So just has to be build in that, all right, at 2 p.m., I'm leaving, and build in that habit of, you don't need to stay. And that's been helpful to me. And again, it's always a work in progress because, as you know, if you're in the room, I'm there a lot. Um, Another one was bumping up cardio. I definitely failed into the last quarter of keeping up with that. COVID kind of screwed me up for a little bit with cough and viral induced asthma and all that kind of stuff. So set me back, got me off my egg. I was doing really well with it, but there's no excuse at this point. So I just need to actually do it, build it habit again, build it as a habit again, and move forward. So that'll be probably my main goal to get back on that. Continue to find hidden gems within the IU community, as we did in 2022. Break them out of their shells, and Sam was a great example of that. Huge value add to the room, as well as some of the most recent interviews, people that you might have never heard of before, sharing some stuff and giving you guys some aha moments, and hopefully make everybody a bigger part of IU in general. As I am hopeful to not be 150% of IU and slowly become a lesser and lesser part. And last two is take vacations that I actually don't trade. Maybe just one day, but not every morning. Connect with more traders, both locally and as we were doing with me and Sang Lucci, we were doing some Lucci meets. We did like 5 or 6 of them prior to COVID, but then we kind of stopped. Like to do that again. We did that in San Diego. That was awesome. Met a lot of great people. And like I said, locally, I have some plans in August for some traders. Hopefully make some good content and do the beach, the lake, and all that good stuff. So anyway, that's it. So those are my goals and game plans for 2023. Those are some other thoughts that I think are important that you need to hear for 2023. But remember, it's all down to you. You're never going to mimic and copy someone else. You're always going to just take little pieces from everybody and find out the best version of yourself as a trader. I think the biggest issue that people make, or the biggest mistake people make, is they try to replicate someone else. And replicate someone else, you don't know if that's going to fit your own personality, and a lot of times it won't. So you'll continue to fail and wonder why. But you need to create that version of a trader by yourself, by taking little things and creating your own trader. And don't replicate somebody else. So that is it. Let's get right into scan for the week ahead. All right, guys, second part of scan. As always, not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. If you're not okay with that, shut it off. If you're good with that, keep going. Goal here is to kind of show you what I'm preparing for the week ahead. Current market cycles, current market environment, what I think could be good, what I think you should stay away from. And if that turns into a trade, fantastic. But if you're looking for buy or sell recommendations, you're in the wrong spot. All right. First and foremost, let's get some winners for last week. As always, if you leave a key takeaway, comment section, YouTube, leave the timestamp of your key takeaway. John Zayankut, Jaznola, and Wanna-Speed. Email me this week, webmaster@investorsunderground.com. We'll send you out a t-shirt. There was a couple from last week who did not email me yet, so make sure you check scan last week. It was in the actual scan itself. So if you just watched the video, you probably didn't pick up on it. So let's just jump right into it. So first and foremost, we've got TGTX. TGTX is a nice, steady ripper. It reminds me a lot of something like, VG TX, which just kind of keeps on going and going and going. So nothing that I want to jump in front of. However, I've been prepared in the event that it gaps up maybe to 12, rips to 1250, and gives some sort of reactive trade. Otherwise, watch for dips, watch for something versus the prior VWAP levels or 1150s, and then you might see it start to rally back for a red to green move, which in my opinion would be a good risk reward style trade. Pally, Pally should be, pretty standard, pretty straightforward. They did a raise pre-market, which was really nice. Fortunately, it was there, was leaning into this move, and then we got the offering. It actually gave an opportunity to add some more on the offering. It sat there for a second, so got a good cover off, and you can also see that there was quite a bit of support pre-market in this range, right? So it started to hang out and then rally back. So as you guys know, there's only a couple names that are trading, and stops going down. Got to be cautious. Everybody wants to lean on this one. And in the event that it stops going down, they're going to be on the wrong side. So we obviously had some great opportunities. I think looking left was helpful for most part during the day. You can see it peaked out over here, had that one extension day or extension move, and for the rest of the time, it ended up peaking out at those levels. We talked about 740s being key. We talked about, I think it was, I don't even remember at this point, right around 650s, and then all the way back down. All right, it was 620s, and ended up being the key spots where things really started to either get into high gear and exhaust out, or get trappy and start to peak out. So understanding what levels matter. It was huge on Cala. It was huge on Pally. So make sure that you guys are drawing these lines. These are all drawn ahead of time. It's not going in after the fact and saying, well, you could have done this, could have done that. My goal is never, especially in the room and Traders Lounge, is never, I told you so. I want you guys to see it live, real time, before you can go back and say, oh, well, this is why that happened, or this is why that happened. I want you guys to see it ahead of time as it's happening in a real time environment. So that's what the goal is during the day in the Traders Lounge. And we had a full on conversation about Pally, HOTH, and Cala, Kala. But key levels worked exceptionally well. And, especially all the way down into I think it was 570s range or so, where it's consolidated there late day. So nice squeeze out towards the close. The only thing about that is that means probably going to gap down, would be my guess, on Tuesday. Unfortunately, I thought about leaning there late day. I was off desk, came back, and I was like, you know what? I'm not doing it. I was off for a couple hours on Friday, so I said the hell with it. I'm not even going to touch it. But would have been a nice unwind there. So what I'd be looking for is maybe a retest back up to this level over here, which ends up being about 560, 570 range, which was a key spot on Friday as well. FUTU, this was another fumble. I had it all, every plan to get there 10 a.m. plus and join that fade. I fumbled it. That's okay. I was focused on Pally and HOTH and Cala. But higher the better, failed follow through. It's crazy how these things work. They run up, run up, run up. There's no bad news, no bad news. And then as soon as it starts to kind of fade off, bad news comes. Same thing happened with Tal and GoTo and GoTo and EDU. They're just going, starts to fade off. Guess what? Bad news. For the sector overall, there was negative in the educational space, and then there was negative news in the on the trading front on FUTU. So next, HOTH, higher the better. Again, as always, I think it'll be a crowded one, but using probably that VWAP level as sort of a guide, I'd love to see it kind of retest back up. That'll be around the 8 range, 810 range below off this prior level of sort of resistance. That would be ideal. So I do think it's possible. I do think we're going to have a gap down, but I'd be watching if it was, 720, 750 gap down. Watch for that swipe up towards that 8 level for a potential failed follow through. Other than that, we've got ATNF. ATNF is on the failed follow through section. Nice grinder on Friday. I had no trades on it. It's just one of those where it's like kind of grinding along. And, there was this exhaustion move here, and you do have the lower highs. You do have a nice setup here, but again, I was off desk. This is the sort of setup that I look for. You're looking for that channel, and then it starts to fail to follow through. So that said, I'd be looking for a gap up versus that 370, 380 level on Tuesday. And ideally, we have some sort of failed follow through opportunity. And if people were fighting it up on Friday, hopefully they stay away from it, keep it uncrowded just because they're exhausted from trying on Friday. Cala, we'll see. I mean, this is one of those where it's I'm trading it, but I'm not aggressive. So I'm not going crazy size. I'm not trying to be a hero. You'll end up broke if you try to be a hero on it. So I think it's good to watch this one to get a feel for the underlying market, the cycle, where we're at, how much, if this were to go to 80, I'd be cautious. Goes my phone. I'd be cautious with HOTH. I'd be cautious with Pally, just because people are going to be more excited to just chase stuff at any cost, regardless of a raise or anything like that. So keep that in mind. Tal continues to be on watch, 10 a.m. plus, kind of trend join. Same thing with EDU, same thing with GoTo. These are all fantastic opportunities. These were the focus of last Sunday video, and before that, you can see why. Major opportunities. You just have to stock the trade until it exhausts out. Finally got that day. And once again, you could see, trying to find that top. You didn't even need to find it. You could have waited to the second day that it remained red, right? So gapped up, closed, weak, and then the next day it came back up, retested red to green and failed. And then that point forward, it faded off. So that will help you rather than trying to always find the top and exhaust yourself out before the trade comes and then you miss it altogether. ARDX, some breakout charts, no position on this one, but continues to go. It faded off this day, but you can see the wicks, right? And it had a point target that got sold off, and then they saved it. And so this is that dip and rip candle plus these three other wicks that we talk about as far as increasing the longevity nature of the move. Last time I think we talked about it was 9. We were talking about these wicks on the daily, how it allows it to have a longer term move in the event when it starts to carry on and break out from those wicks. Vapo, you guys should all know this one continues to go. We've got the wicks now. I've been in this thing for a month, so we'll see what happens. PRQR continues to break out. Nice liquidity trap there. You guys can clearly see the 100 billion share day almost, and then it starts to get soaked up. So I'd be watching dips versus those 350 levels until we get some sort of blow off. 4 to 5 would be ideal. TBLA, fantastic opportunity setting up here potentially. As long as 3s stays as sort of the base. If it starts to peak out and fade off, I'm probably not interested, but this is a nice setup here. All soaked versus the VWAP level. 320, 330 area is the trigger for breakout as a potential squeeze. You'll notice FREQ, which was the similar setup last week. I put this on Sunday video. We're talking about how this could be a potential breakout. Went nuts. So these charts are working. It's no different than the PRQR that we talked about. And same thing, with obviously this TBLA. I'm not saying that it has to go, but I wouldn't chase a breakout. But if it starts to build over time, then I am super interested. Next up is SLNO. SLNO, you can see the same wicks, same action, same stuff that we've been talking about. You have a liquidity trap right here. You've got the wicks app liquidity trap and went from 100 million to 6 million to 2 million to less than 1 million shares traded. 445,000 shares. So you went from 105 million share day to 445,000 shares. No one could cover if they stayed short from this level in any size. 400,000 shares. If you've got 50,000 shares, good luck. You're gonna pop it up. So does that mean that it's gonna squeeze? No. However, if it starts to build and hold over 2, if they get another PR, if they have another 20, 30, 50 million share day, my antenna is going up and it is ready. It's on alert. And if it starts to hit that high day list and start to go nuts, I remember this move. I remember that it is setting up as a liquidity trap, and I don't want to underestimate where it can go. So I think that's it, guys. Happy New Year. Hope to see you guys in the room, and we'll see you next Sunday, if not.